Happy Tuesday, everybody. I hope you had a fantastic weekend. Today is Tuesday, June 7th, 2022, and this is your one day late Monday market update for Tuesday. As we do every week, I want to review what happened last week, a bit of why it happened, and then look into this week for what to watch and maybe what to expect. Let's jump right in. Last week was a holiday shortened week, so as the markets were closed in commemoration of Memorial Day, the market opened with a bit of a hangover after a long weekend. On Tuesday, stocks came for sale right on the open, weighing on the market with some inflation readings from Europe and more, yes, you guessed it, Fed heads. This time it was Waller who actually spoke over the weekend saying that the Fed should raise by 50 basis points until inflation comes back to 2%. Clearly a hawkish stance. Oil prices were up as Europe pushed ahead with the partial ban on Russian imports. After the open and the minor league eco numbers, the S&P 500 did hit session lows, but did not keep falling. So that stabilization was a positive for the markets. Powell and Biden met, and as I mentioned last week, nothing but a photo op. No real conviction in the market moves, but the market moved back up to session highs and then pulled back into the close to close in the middle of the range. S&P, Dow, and NASDAQ all down about 0.5%. A bit more info from Tuesday's news lines. Janet Yellen admitted that she got it wrong in her inflation views last year. Yes, we know that, but it is notable that we have politicians, or at least members of the administration, the Treasury Secretary, admitting that she was wrong. When was the last time you heard that out of D.C.? We had the Fed head Bostic also note that his Fed should pause comment should not be heard as a Fed put, so more of a correction. Recall that the pause idea gave the market some life last week before the week before last. Finally, as the last day of May, the S&P 500 finished May at 4132. Want to guess where it started the month? 4131. May was sound and fury signifying nothing. For those who think I can only quote movies, how about some Shakespeare? So the first day of June, Wednesday, brought a quiet start, but not for long as stocks sold off when Jamie Dimon, JP Morgan CEO, dropped the line that he worries that we are headed for an economic hurricane. And on the first day of hurricane season, nonetheless, we also had some disappointing ISM PMI data on the eco front, and that pause that we just mentioned seemed likely. Seemed less likely, The markets were down more than 1% by lunch, but stabilized, and much like Tuesday, if we don't keep falling, that's viewed as a change, and to some degree, positive. April and May, we saw the drop, followed by more of a drop. So when we get stabilization, that makes dip buyers come back in. The market was little changed going into the last hour, but some late selling brought the S&P 500 down 0.75% by the close. S&P down 30, Dow down 177, NASDAQ down 90. Question we seem to ask now is good economic news bad for the market? I'd say no. Good news may be bad, but great news may be bad, but good news keeps us from stagflation worries and maybe even recession worries. So we should look for some moderation in the eco data, but we don't want amazing good economic numbers, and we don't want horribly bad ones. We know that the Fed is hawkish, maybe coming off a peak hawkish level, so we need the economy to moderate, not roll over or take off. So Thursday we saw futures looking up, then down with the news that Microsoft was dealing with headwinds from the U.S. dollar. Remember, I've been telling you that it would hurt us and hurt U.S. multinationals. We also had Fed head Brainerd throw cold water on the pause idea again, and that did push the markets down. How could it not? But never fear, S&P 500 put in the low for the day at 10:30 a.m. Eastern and climbed the rest of the day. Why? There were actually some good reasons for this. Consumer spending trend information from some companies gave things some life. ADP data showed labor market moderation. OPEC even said they'd pump more oil, even before Biden gets there on his upcoming trip. Overall, the resilience of the market make people feel better about moving into the market. The market set up for Friday's jobs report, and the S&P was down almost 2%. Dow was down about 1 1/3. The S&P was up almost 2%. The Dow was up about 1 1/3%. The NASDAQ up 2.69%. That's on Thursday. Lots of talk about the Jubilee in England and, of course, the Little Prince and how he reacts to planes and the noise. If you missed it, check it out. It is something to look at. Friday came in and all was supposed to be about jobs, but in comes Katie Huberty and cuts estimates on Apple. Now that's chutzpah, right? Well, with the stock down so much from its highs, why now? Or more specifically, is the price already figuring in these changes? Well, that and the jobs number, add in Elon Musk being super worried, quote unquote, about the economy, and the market was back in sell mode, but as ugly as some of it was a bit orderly. With the summer Friday volume being low and these negatives, the market finished near the lows, down about 1% S&P, a bit over 1.5% on the Dow, and the NASDAQ down almost 2.5%. For the week, all of the indices down about 1%, but remember, at the S&P at 4108, still well above recent lows, and the debate goes on, did we hit bottom? So quick roll into Monday's market. For anyone that missed it, we gapped higher on the open yesterday with news from China that COVID lockdowns were easing a bit, as well as backing off from some more Chinese tech companies. That put the markets into buy mood around the world. As the S&P 500 approached the highs reached last week, the market ran out of steam, and since there was no real catalyst and thus no real conviction, the markets moved sideways until the 10-year yield hit 3% again. Stocks sold off, bounced a bit into the close, but ended off the best levels of the day. S&P up about 1/3 of 1%, Dow up just a hair, and the NASDAQ up less than 0.5%. We're opening today, Tuesday, with more news from Target about inventories. Their story seems that it's not yet done. That turned a slightly negative market into a more negative tone. For the coming week, this is really like the post-jobs week playbook, except for Friday. We have very little coming along this week unless companies like Target keep making news, a few eco numbers, and no Fed speakers. A few remaining earnings reports, none of them big names. Friday's the big day to watch. CPI, of course, the inflation watch. We'll still be watching to see if peak inflation turns into inflation receding. Not sure we'll see it yet, but keep an eye out. As always, even a boring summer week in the markets will not be boring. Graduations are all over the place, so congrats to all the graduates, especially my youngest, who is graduating tonight as the valedictorian of his 8th grade class. We're very proud parents. Congrats to Ezra and to all of the graduates and their families. We'll be back on Friday with some more planning ideas. Have a great week.